Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well.
Hello, everybody. Welcome to Wealth Coffee Chat. I'm Sam Saggers, filling in for Jason this morning. Welcome to, it's Tuesday. Kevin's on. Wow, tuning in from Florida. Wow. Good evening from Lakeland, Florida. Good evening, Kevin. And good morning to everyone else. Good morning, Luke. Big day today, isn't it? It's the hike or hold day. It's the day the Reserve Bank of Australia will meet to talk interest rates to see where the economy is going. So I thought today we would dive into the situation or the likelihood of a rate rise or a hold. Hey, Jeff. Welcome to the show. Yes, congratulations on your decision there. Good stuff. We'll let a few people chime in. Margaret's joined us. Thank you for joining. I'm Sam Saggers, today's host. I'm going to help Jason out. He's got a few things on. So I've dived into run the show. But today is hike or hold Tuesday because the Reserve Bank of Australia is meeting today to talk about interest rates. So we might dive into what that looks like. So let's take a look. Hike or hold. Where is the Reserve Bank at? It's a maybe put in the chat. Where do you guys think the Reserve Bank? Do you think they'll leave rates where they are, lower rates, or even hike rates? Anyone got any opinions? Who's tuning in? There's just a couple of us online right now. No one? All right, leave it to me. That's okay. I've got some opinions on what's going to happen. So let's have a bit of a sticky beak at really what Luke's got to hold. Yes, I think that's pretty sound. A lot of holds coming through. All right. Just to guess, Margaret, hold. That's all good. So today, I think we'll break down what's going on with the economy, what the Reserve Bank have to consider when they're making their rate call today. Obviously, the economy is a level of a mixture of confidence and money. I get a lot of my research through Oxford Economics, of which I subscribe. and really we'll take a look at potentially what is going to happen with where the Reserve Bank kind of sits. So let's take a look at inflation. Inflation is still well above where it should be from a targeted point of view. Obviously, the Reserve Bank of Australia is targeting a sort of 2 to 3% inflation rate. We're above that, closer to 4%. So inflation's turning out to be a little bit sticky. And of course, this is the one, I guess, thorn in the side for the Reserve Bank. They seemingly can't get the inflation rate back down, albeit it is sort of moving into the right sort of space for where the Reserve Bank kind of has been pushing it. And if you look at that chart, you can see it's come off a massive load through the period of COVID, and it's starting to work its way back down. It's a bit of a grind. So certainly from an inflation point of view, the numbers are looking better, but still work to be done there. And so certainly from the Reserve Bank's point of view, they'll be watching what that looks like. Obviously, the stock market got rattled over the last couple of days, which probably leans towards the Reserve Bank of Australia holding. You might have noticed the ASX lost ground over the last couple of days, and the US stock market also tumbled. Really, that correction of stock prices came from some unemployment figures that came out in the US. An American economist called Sam has a rule, and basically the market responded to that rule, which was effectively that if you've got sort of 3 months in a row and the unemployment rate drifts up by 0.5%, you're effectively in a market sort of downturn in the jobs market, and really those figures came out in the US and really rattled that sort of confidence in the stock market. So the unemployment rate is rising as interest rates are much higher across the globe. And so the Reserve Bank of Australia will look at the unemployment figures. And ultimately, for the Reserve Bank, they actually want a little bit higher unemployment so that they can start to lower rates. Unemployment is probably a lag indicator of policy decisions of interest rate rises, and again, a lower level of consumer confidence. So depends how you look at these things, but if we were to look at the Australian economy, it's certainly slowing. We can see that if we look at the GDP numbers to the left, we can see that we're coming off a high base during COVID, and we go into really a low GDP growth section between basically now and this time next year. So it's arguably we're going through the eye of the storm economically, where the rates sit versus the country growing versus unemployment rising. So if we drop over to the employment and unemployment figures, if we look at the unemployment rates, the blue line, we can see really that the unemployment numbers are drifting up in Australia as well. So over the next 6 to 9 months, the unemployment rate is going to come off a very low base of below 4% and probably lean up to circa 4.5%. which, as we know, if you've obviously been part of the economy in the workforce for a very long time, still a ridiculously low unemployment rate. But we can see that the economic measures of pushing rates up has led to the Australian economy slowing, which is leading to unemployment rising. And of course, then it peaks. It peaks at sort of mid-June 2025, the unemployment rate, and then it comes back down. So it's interesting, we're sort of going through the eye of the storm right now, which if this is the worst that happens, I think we're all pretty comfortable with what that looks like. So if we were to go to where the cash rate, when the cash rate will head down, if we go to the bottom left, we can see where the tipping point is. The cash rate is effectively the yellow line. And we can see right now we're halfway through the top of the cycle. You can see from basically the bar line going through the middle of the yellow line, and we're literally, call it, just past halfway. So probably another 6 months of interest rates at where they currently are before we start seeing the cuts come into the market. Now, the cuts will come because if you look at the unemployment rate, it will go up, because if you look at GDP, it will go down. And so you can't have one without the other. It's all interconnected. So if we go to the next slide, and the market interest rate forecast, it's quite interesting. If we go to the 23rd of July, a decrease to 4.10%, the market priced in 0% chance. By the 31st of July, the US unemployment figures had come out. The market had priced in a 5% chance of a decrease to 4.10%. Obviously, the cash rate at the moment is 4.35%, so a quarter of a percentage drop. And we can see today the market has actually forecast a 20% chance of a drop to 4.1%. So we can see that the market is actually getting now very prepared for interest rate cuts, albeit probably a bit early to actually unfold. So interesting stuff. If we go to hike or hold, I'm going to put my guessing cap on, and I'm going to say today the Reserve Bank of Australia will hold interest rates. They certainly won't be hiking them. I would not think so. The US jobless figures came out and shocked the market, so that will work in borrowers' favors, and you will find the Reserve Bank hold on interest rates. Got a few friends who work in the who have a lot of cash, don't have much debt. They're really hoping for interest rates to go up, and I think anyone with debt is probably hoping interest rates stay on hold and start to drop. So depends who you talk to, what you want from this concept, but probably the message here over the next 6 months, we're passing through the eye of the storm. And you will see the jobless numbers rise up. You will see GDP drop. And that's basically the interest rates at work. The beautiful thing about Australian interest rates, the Reserve Bank can pull the lever at any time and drop the rates aggressively to lift confidence in the marketplace. So we saw what they can do. So it's quite healthy to have your rates where they are today, because it allows for economic shocks to work through the system. So that's my forecast, folks. That's it for today. Thanks for tuning in, and Jason will be back to talk to you and talk more real estate concepts. Have a beautiful day, and let's see what happens at 2:30. All right, folks. Take care. I need a coffee.
Episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6 Star team here at positivementor.com.au.